Our next speaker of the day is Fiona Finn, a familiar face if you've tuned into previous episodes of or sessions of Winter Games. Hello, Fiona.
Hello, how are you?
You can ask, how are you doing?
I'm not too bad. I'm great, actually. I think the main thing I
Wonderful,
took away
wonderful.
from that was I need a gif of Andrew saying, make the frickin' comparison chart. So thank you.
Oh, yeah. All right. So Fiona is going to tell us about category creation. So, yeah, the stage is yours.
Awesome. Let me just get set up here. Good morning, everyone, or good afternoon. My name is Fiona, and I am the head of product marketing at a allied healthcare startup called Jane. I would love to connect with you if you have any questions about this topic today, but I am super, super stoked to talk about this conversation because, we're all here today as marketers in a world where we're seeing an average of 6 to 10,000 ads every single day, right? As consumers, it's so hard to make decisions, and as marketers, we really want to stand out from the crowds. And for us, we can always be doing things better, but I truly believe in doing things differently. And when we think about the most exciting, differentiated companies, they're always giving us new, different ways of living or thinking or of doing business. And oftentimes, they're helping us identify a problem we didn't know we have. And a lot of the ways they're doing this is by creating a net new category of problems to solve. So obviously, a key example we'll all think about is Uber, right? Before Uber, we stood out onto a dangerous street to hail a cab, or else we spent ages online in a queue hoping that someone in a taxi office would pick up our call. I would rather walk places nowadays than deal with that. And that's because these category creators changed our way of having those expectations, right? Uber didn't set out to be a better taxi company. They set out to have a different take on how we have on demand transport. They changed our perception of ride sharing, and they didn't give us another mediocre taxi experience. So, with all that being said, we're going to jump into this topic today. Lots to get through. And just to start things off, what the hell is category creation, right? There's obviously many, many definitions out there. There's lots of ways we can think about this space. But I'm going to give you a bit of a overview of how I like to think about category creation. And so the way I think about it is that it is the art of creating net new awareness of a gap that exists in the market or in a consumer's life, and then effectively creating demand for your uniquely positioned and designed solution. And the reason I want to call it this definition is because I do think it anchors a bit of understanding to the market, the customer themselves. And then there's also the need to create demand for your category, right? We know that you can't just put something out there into the abyss and everyone will automatically understand the value of it. And also calling out that you need to be always thinking about how you can uniquely position and differentiate and design yourself. It's also about introducing a totally different way of thinking and a fresh understanding of what is possible, convincing someone that something they thought was never before possible can occur. And seriously, if you told me 15 years ago that I would be calling a stranger to bring me home from the bar, that would not be happening. That is what Uber is. If you told me that we would be staying in strangers' homes via Airbnb, I would think that that's such a crazy concept or potentially have invested, but that's a different kind of story. So this all sounds delightful, but obviously, as I think Andrew even started to touch on, category creation is so, so, so hard, especially in technology, right? We're addicted to trying new things. We're addicted to trying to build faster horses, oftentimes with the resources that we already have. And this is where many companies look at the benefits of aligning with an existing category over creating a new category in order to differentiate. And when standing out in a saturated market, aligning with an existing category might actually be the best fit for you if you do enough research upfront and prioritize differentiation within that category. Category alignment has obviously many, many pros. It's lower risk, lower cost to entry. You can set your benchmarks to success in a saturated market because many others have attempted to do a similar thing before you. For example, in a CRM space, right? There are some expectations. You know what it'll cost to enter the market, acquire customers, and start to pivot and try to differentiate yourself in a known category already. However, category creation is definitely the harder, more costlier go-to-market approach of the two. And really, that is because it's not just incremental improvement to something that already exists, but it's identifying an existing problem and doing a far better job of understanding, articulating, and solving it. And as Clayton Christensen pointed out in Innovator's Dilemma, listening to customers leads you to constantly build better. And we're all customer obsessed, so we all want to believe that we are building better products and doing better marketing at the end of the day. However, listening to customers won't get you to build differently. And different is what creates new categories. So better will often lead you to a faster horse, but different will lead you to a Model T. I didn't coin this, but I thought it was like a pretty good analogy. And full disclaimer, category creation could be a horrible idea for you, right? There are many smarter people that will tell you, please do not even attempt to do such a thing. And that's why this talk is not called 17 Reasons Why You Should Have Established a Category Yesterday. My goal here is simply to educate you on the risks and opportunities in category creation as a marketer in a saturated market. So for successful category creation, there's a set of incredibly uncontrollable measures that need to be met for that perfect storm of market success. So you need to have the right instincts at the right time and the right resources. This is just critical. And a poorly founded category assertion could be a total waste of time, energy, and money, and not even to mention the damage that it could do to your brand and reputation. So just to have a quick glance at what those perfect conditions that need to meet for this perfect success of Storm are, first of all, you need to have vision. And vision is so much more than just your product. This needs to be about the change in the world that your product, your company, and that your category can have. And as Al Ramadan said in Play Bigger, winning today isn't about beating the competition at the old game. It's about inventing a whole new game, defining a new category. And if you think that having the best product is all that it takes to win, you are going to lose. So this is really us elevating our expectations and our definition of vision beyond product. Vision should also encompass where we are today and where you see yourself into the future. Secondly, resources, a pretty obvious one, right? Resources are obviously always going to be one of the key blockers to success for any company at any stage of growth in any market. As we touched on before, category creation is expensive, right? You need to invest in your brand. You need to invest in education about the change that is happening. You need to invest in your team and in your product. And it takes time. Time is one of our most valuable resources always. And it will take a lot of failure too. So if you don't have adequate resources or buy-in to get those resources, which is what I hope the latter half of this conversation will help you with, category creation may not be on the cards for you. Also, category creation is very hard to say over and over again. So thanks for your patience. And finally, timing, right? This is one of the main reasons why not every category creator is a category winner. Category creation is about identifying trends in human behaviors that signal a need for your product and a need for your vision to come to life. And this is truly where you have to put on your psychologist hat as well as your marketer's hat, right? Can you see this change in the world happening? Is this timing going to be right for you? And I think David Cancel even posted this question when Drift were looking to establish a net new category. He asked, are we at a tipping point for change we believe is happening? And also, can we be the first to market with a great new experience that alleviates this known friction, right? Timing isn't just about what's happening out there. It's about your speed to market as well at the end of the day. And many great products come to be too early because the market is not ready to accept them, or they're just too late and there are too many fast follows on their tail. So, with all that in mind, with these three conditions firmly set in our mind, we're going to take this conversation in a positive way. And we're going to say, okay, what happens when you have vision, when you have resources, and when you feel that that timing is right to launch a new category? Why should we take these steps? Because when it works, truly, it can make you invincible. Or when we think about the most exciting, memorable companies and products that we love to use and probably would even dream to work for, many of them are category creators, and most of them are something that we would call category kings. Salesforce, right? The grandfather of SaaS, created cloud based sales automation. And they also created a new way for marketers to think, or for the market to think about sales software. And changing that market mindset is a philosophy that paved the way for many other category creators to prioritize that approach. HubSpot, obviously, coined the term inbound marketing. And they also invented just a completely new method to capture customers through B2B marketing automation. They also created a matrix to help companies produce great content and have buyers come to them. And this positioned them as, the standout authority of all things inbound. They educated, they built trust. They didn't just try to sell a product at the end of the day. Of course, Slack, everyone's favorite tool, I think. They're the perfect example of fulfilling a need that customers couldn't quite pinpoint before they came to life, right? In office communication. It was so imperfect, but no one knew what the better solution was, right? And now I don't think any of us would go back to using email as an efficient means of communicating after we've experienced this change that Slack has brought to us. And ultimately, these category kings have paved the way for many other products and platforms to learn from their mistakes and enter into the world of category creation in a very saturated SaaS market. We obviously have Drift, who coined the term conversational marketing. We have new players like Gong coming to life, testing the water with revenue intelligence. And even last year, on Bounce, we pivoted from being a landing page platform to a conversion intelligence platform. And maybe these terms like revenue intelligence and conversion intelligence aren't really common stakes in your vocabulary right now, but that's because they're at the early phases of category creation, right? These things don't happen overnight, but as we start to see their categories mature, I would not be surprised if you start to see and use these terms more freely as well. So with that, let's get into it. 3 reasons it pays to be a category creator in a saturated market. So number 1, you define your worth, i.e., as a category creator, you can truly name your price, right? You're defining a totally new problem and mapping a totally new solution to that problem. This is something net new that people can buy or probably even dream of. And with that comes the luxury and flexibility of setting your price point. If you're solving a problem that has already been done before, for example, online booking, there's already a set price point for online booking, calendaring, scheduling. There's already an expectation of what that should be for a consumer. However, in an undefined category, you can totally break free from these benchmarks. You can break free from anchored pricing. You can break free from those comparisons and set your own. There's also a secondary huge benefit in this as well, in that nothing will impact the evaluation of your company more than your pricing. And this is especially true in an enterprise setting, right? There are a finite number of deals that a sales team can do or close or start in a sales cycle. And there's also a set cost to a sales team. And so those margins are set and they're predictable. But if you can bring in a new price point to your commodities, you can optimize that value from your sales cycles infinitely. And as a new product category, what if you have no clue what to price yourself, right? This has never been seen before. There are none of those benchmarks that might hinder you, but also might help you, right? Are you priced too low, too high? And when I talk about pricing, I always like to think of it as a two-way door decision, right? Whenever you make a decision with pricing, you can always iterate, you can always optimize it, just set those expectations with your customers and also obviously with your internal stakeholders. So in the early years of category creation, you're really asking your early adopters and your visionaries to take a bet on you, right? Your value might be huge into the future, but your product market fit isn't there. It hasn't been validated. So you should always be engaging your early adopters in willingness to pay conversations, pay really, really close attention to their feedback, and start to get a really, really clear idea of the value drivers of your product, and also how you want to set your price point. So TLDR, by designing a new solution and reframing existing problems in a totally new way, it lets you manage the expectation of value and set your price point. Reason number 2 why it pays to be a category creator in a saturated market: you control your narrative, right? When you define a market problem better than anyone else, your buyer will automatically assume that whoever defines the problem best should have the best solution, right? So as a marketer, this is really your time to shine, right? This is, your story that you choose to tell. This is your point of view on a change that's happening. You are sharing with the world. When Slack said email is dead, we all stopped for a second and said, okay, well, what is the alternative, right? So when you're establishing your product category, what is that change in the world that you're addressing? What is your take on a common preconception that you're going to put out there that will push people to think differently, but also get a quick understanding of what you're about and what to expect? And so your point of view should drive category design, it should steer product development, and it should completely permeate that company culture. And if you're first to market with a new category, remember that this is your story to tell. Number 3, why it pays to be a category creator. You can create infinite growth ops. I'm not saying that everyone will, but it's definitely there for the taking. So there's also 2 elements to thinking about growth as a category creator. In its simplest form, you could define your own market size and move potential revenue from one existing market into another one and watch it completely grow, right? You're removing your own market limitations by category design. So, for example, what might be a fit for a solo lawyer in legal tech might also be a fit for a solo bookkeeper in accounting software. But others may have failed previously to address those 2 different markets. So why not capture these 2 huge markets together? And a really interesting economical element of category creation is the fact that some of the great category kings have actually been built during the worst times, right? Google came to be in the early 2000s during that dot-com crash. Airbnb came to be in 2008 as financial markets melted. And even Birdseye came into existence during the Great Depression. So by not relying on the fragilities of known or existing markets, you're totally free to stay flexible, to mold your own definition of a market and then dominate that market share. And then this is where the concept of a winner takes all approach comes in to being a category king. Between, I believe, 2000 and 2015, research found that category kings earned 76% of the market cap of their entire market categories, right? Even the competitors, even the category kings that we spoke about earlier, HubSpot and Salesforce, they're now operating in super saturated markets, but still own approximately 25 to 30% of their market share. And so the category king strategy is important and effective both when an economy is roaring and also even when downturn is happening, because it kind of starts to take out a lot of those smaller competitors. And why is this, right? How do we create that white space between entering a market and becoming a category king? So once a company wins a position as a king, the gap widens between the leader and the rest, right? Your brand is strengthened through word of mouth. Partners want to all sign deals with you. Really talented humans want to work for you and want to build out your product and your marketing strategies. The most, fruitful and promising investors want to give you their money, and everyone wants to give you better advice, right? So as you start to get all this traction, a category king pulls farther ahead, and then they can continue to make strategic acquisitions, increase their value, and differentiate even further. And so the economic power of a category king builds and builds and builds. And if that's not a reason, I don't know what isn't to give this a go. So don't just stop at trying to build a great product or build a great company. Go for full category design, where you can bring your category, your company, and your product together. So, in sum, my kind of key takeaways as to why I believe category creation could truly help you differentiate in a saturated market. It's a really proactive way of creating defensible differentiation when your market is super busy, noisy, and saturated. It's a completely new way of breaking new ground and having others start to compare themselves to you. While you are already laser focused on the path ahead because you've named your price, you control your narrative, and you're focusing on what that future market share is for you. And when all these conditions align and are executed well, the category king takes all. Sweet. Thanks, everyone.
Thank you very much. Okay, I've a ton of questions, and I'm interested in your take on these things. So, category creation, is an abstract concept.
Mhm.
It's not a real thing. It's just we agreed it's a thing,
Yeah, we
and
decided
hence
one day.
because it's like country of Sweden. It doesn't really exist if you go there. There's no. We just collectively agreed that it exists. So there are conflicting definitions out there, and so
Mhm.
there are a number of, let's say, influential people who talk about this consistently on LinkedIn and elsewhere, write books about it. So, for instance, David Cancel says, well, 10 million bucks or more to create a category. Otherwise, it's just it's not enough. Christopher Lockhead, Category Pirate, says, oh, any small business can do it. It's actually a form of radical differentiation.
Mhm.
So, what's your take here?
I wouldn't say that they're conflicting interpretations. I would say they're different interpretations, right? And I was actually thinking about this morning. Like, what does it truly take to create a category? I think a lot of that will come down one bit to the resource piece, which is the budget. Like, how much does it actually cost to create a category? I've not heard a specific number. I don't think anyone will actually tell you. Now I
Oh
know.
no, David Cancel is on record on my podcast saying that it cost Drift to create conversational marketing $10 million.
Totally. And that's one individual as one company with one product category, right? But I wouldn't say it's equal for all product categories, right? It just costs a lot. And I would imagine that it comes down to probably a percentage share of your earnings or what you're willing to spend. And it probably would depend, again, on how saturated the market that you're in. The greater market that Drift was previously playing in is marketing technology. We know that that is a market that is in growing 25% year over year, right? That is so intense. If we were perhaps to look at another market, say, I don't know, rocket something or the other, perhaps there are less players. It may be more costly, but it may be easier with less percentage of your total spend to be a category creator or owner in a less saturated market, if that makes sense.
So in the book, Gainsight found created customer success. The guy wrote a book about it. So he says in his book that if it's only you doing the thing, it's not a category, right? And again, Christopher Lockhead, the Category Pirate, says that no, just you alone being different, that's category creation.
Mm.
What's your take here?
I think that you want to be first to market, but you want to have others to follow to validate that that category is actually solving a problem and need. So, for example, Uber was likely in our minds first to market with ride sharing. But I'm sure that they weren't shocked or horrified when Lyft and all these other competitors came to market to validate the safety, the credibility, and the authority of what they were saying was true. At Unbounce, we've had many of these conversations in trying to establish a product category that we're calling conversion intelligence. We want to look at other tools to say that they are actually solving the problem of conversion intelligence, but we want to be the conversion intelligence platform, right? So it's a bit of a chicken and egg conversation is actually probably the way to frame it when it comes to category creation. You want to be first to market to own your narrative and set your price point, but you also want to have enough flexibility that you're okay with other tools coming to market to validate that, yes, this is a problem that needs to be solved. You do have a level of authority in saying that this problem exists, but you want to make sure that you have enough white space to own your message, own your price point, and capture your target customers.
Mm-hmm. So if we add another perspective here, so we have the concept of strategic narrative, right? So This is Andy Raskin and so on. So his idea is that, which basically aligned with everything else. But again, like Gartner and Forrester are never going to create a category just because you're pushing a narrative. And so, for instance, revenue intelligence Gong is never going to be a Gartner official category. So then, if a tree falls in the forest, like, and so on and so forth. So when is a category a real thing? Who says that this is now a category?
Oh, that's a really, really good question. My own 2 cents is that, it doesn't stop with a Gartner or a G2 Cred or someone saying that a category is a category, right? I think the market has to tell you that a category is a category, right? I think it's
How,
like,
how do we
I think it's one of
how do
those
we know?
things like it's like product market fit, right? Yes, we have a score that we can do in a survey that we can give our customers to say, yes, we have reached this 50-40 mark. We have product market fit. That is a means of giving you the confidence that you have product market fit, similar to the way that I would view Gartner and these, and giving you confidence that you are operating in a new product category or you have established a product category. But I don't think that that's the beyond and end all. Again, that is my own silly opinion. But I believe it's more of an intangible sense that when your customers and when the market is using your terminology, when you can hear your customers and your market and your competitors bringing that narrative back to you, it's more of that intangible sense of your vision is aligning with that change in behaviors and it's being repeated back to you versus you just repeating it out there into the world. I know that the more data literate people probably hate that answer, but that's the way I feel.
Well, I appreciate your perspective. A couple of audience questions as well here. So Vasist, sorry for butchering your name. He wants clarification, and so the question is: when we say creating a new category, are we saying that we're trying to change the customer behavior or make a shift? Can you clear this up?
Yeah, that's a great question. When we're creating a new category, I think we should identify that there is already a change in behaviors happening out there, and we want to marry our solution to that behavior and change that experience. So, for example, let's use Slack, right? Email was great for office communication. It was fine. However, there was a change of behavior happening in that people weren't fully satisfied with that. It was slowly more inefficient than it previously was. How do we solve that efficiency piece? We create something that new. So Slack was marrying that change of behavior, that change in expectations with the new solution. And that just, completely created a new category of in-office collaboration and communication.
Cool, thank you. And the last question, this is Paul referring to something that David Cancel said on my podcast recently, which was that he says, do not create a category. Instead, tap into a large existing category with pre-existing demand.
Mm-hmm.
And the reasons he gave is like, A, your timing needs to be impeccable, and you're probably wrong about the timing. And B, you don't have enough money to tell the story, so it's never going to get enough momentum. Any thoughts about that?
I totally agree with them. I think that's why we have this topic of category alignment versus creation. It's a choice, right? It's a strategic choice. Why would one company decide to have a sales team versus not have a sales team? This is why you should decide to align with an existing category or take on the challenge to create your own. It depends on how big you want to dream, what your vision is, what your market is. I just don't think there's, in marketing, in business, and product, there's no binary rules. It all depends on how big you want to be, and then find the strategy that will get you to that point, right? For some people, it will be aligning with an existing product category. For others, it's like, no, I want to create my own category. And what is right for one, it might be right for another, and vice versa. So.
Exactly right. I'm totally with you here, because really it's a question of strategic trade-offs and making a bet of what is a game we can actually win.
Totally.
Right, depending on what the market landscape is and your resources and etc. Awesome, Fiona. Thank you so much. I appreciate you.
Sweet. Thank you so much. Have a great day, everyone. Bye.
Cheers.